Welcome back to the Investment by Design podcast. Today we're talking everything Cairns Real Estate and where it might be heading coming into 2026. Now I think before looking into the future and making some predictions into the 2026 market, it's important that we take a step back and see how the market has performed over the past 12 months. If you are a Cairns resident or you have been keeping track of the Cairns market, you are no doubt in the know that the Cairns property market has absolutely exploded over the last couple of years. And we've seen some really interesting trends emerge into 2025. One of the really exciting things that we saw in 2025 was that Cairns become one of Australia's best performing cities, with the growth outpacing many of the capital cities around Australia. One of the major trends that we saw in 2025 was that affordability was playing such a crucial role, and we really saw the market drive from the bottom up. And what do I mean by that? I mean that the cheaper price points really led the growth, and we saw this particularly in apartments and units. Apartment and unit growth well and truly exceeded that of the housing market during 2025, and it was as buyers were chasing the affordable properties that they could get into. You don't have to go too far back into the past, and you could pick up houses in Cairns around 400,000 and apartments around 200,000. Now during 2025, this pretty much come to an end. At the moment, you really are pushing to secure a house under 600,000 or an apartment under 400,000. So this is where the bottom of the market really led the push, and then that pushed the upper price points up as well. But the market is leading from the bottom up at the moment, and I don't expect that to change. Taking a look at some of the growth numbers, and we see that the inner city suburbs performed so well. We look at Manoora, Menunda, Moorabool, Parramatta Park. Those suburbs really pushed up and led the charts when it come to price growth. Menunda in particular, apartment growth at 25% for the last 12 months, which is exceptional growth by any measure. Contrasting this, Palm Cove actually recorded negative growth over the last 12 months, which is really interesting. But one word of warning when looking at price growth data is that the data can be skewed. So these price points are your median price points and your median growth. And what sometimes happens is, take Palm Cove for instance, you might have a whole lot of sales and a whole lot of developments that come into an area below the current average price point. So these might be sales of sort of subpar quality homes, and these start to bring down the median price point. Where if you actually look at a comparable property and what it sold for last year versus today, you will see that even those markets have grown despite what the median figures might suggest. So this brings us to where the market might be heading in 2026. Now, Cairns is an absolute beautiful place to live, and it's somewhere I'm so excited and so passionate about investing. Doing the research for this video and bringing up some of the latest data really got me excited when it comes to looking at where the market might track next year, as there's so many positive attributes heading in the right direction for Cairns and its economy. One of the big resources that I lent on when preparing the information for today's video was the Cairns Council's Towards 2050 Growth Strategy. Now this is like a 124-page report. It's extremely comprehensive, and it basically summarises what the Cairns Council's future plans are, where they see the growth opportunities, where they see population growth happening, and what they see forecasted for the Cairns economy. This report is super insightful. If you are wanting a copy of it, I'll leave the link in the description of this video. So moving into the drivers for the Cairns real estate market in 2026, I think one of the biggest drivers will be population growth. Now we've seen a really steady growth over the last 5 years since COVID, and this really isn't going to change into the future. The Towards 2050 report anticipates an extra 72,000 people coming to Cairns over the next 25 years. That's a 40% growth in our population. Now that's people that are going to need housing to live in, and this movement of people is going to create jobs for our economy as well. So this is going to be a major driver over the next couple of decades in the Cairns market. One of the really interesting stats that come out of this report also was the fact that 1 in 4 people are living alone, and this number is due to increase into the future. What that means is more demand for housing as you have fewer people living in each property. Add to this an aging population, possibly looking to downsize into the future, will add further pressure to the affordable housing price points. So when you look at the next 25 years of population growth in Cairns, this report suggests we need an extra 33,000 dwellings in the area. This is a massive uplift, and a huge amount of extra properties that need to be developed in the Cairns region. One thing to consider when thinking about these additional 33,000 dwellings that are needed for Cairns is affordability. We have an aging population, we have a big rental space, and the cost of living is high. So when it comes to adding these dwellings in, there's a very good chance a lot of them are going to have to be apartments to service that affordability price point. But the challenge at the moment is that the replacement cost of units is far higher than what they're actually selling for. So this puts units and apartments in a really good position to continue to grow through 2026 and into the future. Moving on to the Cairns economy, it wasn't that long ago that we really were a one-trick pony. We were so reliant on tourism, but this has massively changed over the last decade. Cairns is now the major hub for Far North Queensland. We service all the way up to the Thursday Islands, almost across to Darwin for so many different things. And this has really positioned Cairns economy on the map as being quite diverse. Referring back to the Towards 2050 report, the Cairns Council anticipates there'll be an additional 32,000 jobs created over the next 25 years in Cairns. This is a massive boost to our local economy. Another interesting factor to look at when looking at the Cairns property market, especially as we head into the future, is our limited growth corridor. Essentially, we have a mountain range that separates Cairns from the tablelands, and it limits our areas that we can actually develop housing. Now that mountain range runs to Palm Cove before it connects with the ocean, and it really only leaves a growth corridor to the south of Cairns. But in the Towards 2050 report, the council's very deliberate in the fact that they're not going to allow Cairns to continue to sprawl to the south, and they're going to be looking to increase our densities, especially around the city area. So what that means in real terms is if you can secure large plots of land close to the CBD, those pieces of land are going to become very valuable into the future as the council looks to promote those infill opportunities. There's a number of challenges facing Cairns when it comes to providing those extra 33,000 dwellings over the next 25 years. And one of them is the costs of development. If we look at apartments, basically since 2010, new apartment developments have been basically non-existent. And the big reason for this is that the existing stock is selling so far below replacement cost. What do I mean by that? Well, in today's market, it's not uncommon for apartments to sell between 400,000 and 500,000. And the reality is if you wanted to go out and replicate those apartments, developers are not seeing the opportunity to do so profitably under around that 800,000 mark. So what this means is for those apartments to be replicated and new supply come to market, we need to see the existing stock increase in value by almost double. Now, the problem with this is even if apartment prices do double over the next 10 years, the chances are that the construction costs will also keep going up. So while they might need to double today for developers to come into the market, the reality is in 10 years' time, they might even need to triple from where they currently sit. So this makes me really excited about investing in apartments in the Cairns market. The one exception to this is the premium end of the market. So when I talk premium end, I'm talking esplanade front apartments, I'm talking beachfront apartments. Those apartments that can command premium prices in the market today do have opportunities for developers to come in and build those, but we're looking at $1 million price tag for those apartments, not the apartments currently priced $400,000 to $500,000 in the market at the moment. In regards to land supply and the development of extra houses, really the only growth opportunity is around that Mount Peters estate. Now, at the moment, there's an extra 18,000 lots earmarked for that area. But the contradictory thing here is the council haven't been able to keep up with infrastructure when it comes to water supply, when it comes to sewage services for those extra 18,000 lots. The council can't currently keep up with the demand. So that's causing delays on that Mount Peters estate actually being delivered. And that's going to be a continued problem into the future. And as we know, real estate comes back to supply and demand. Demand is high and supply is limited. So that really only leaves one direction prices can head in. So looking into the future, looking at the 2026 real estate market, there is some risks that we would be naive to not acknowledge. The first big one is affordability. We need wage growth to continue and interest rates at the very least to stay stagnant in order for prices to continue to rise. If we don't see that wage growth continue, people simply won't be able to borrow more money to continue paying higher prices. And similar, if we see interest rates increase during 2026, this is going to limit people's borrowing abilities. So affordability is a massive risk moving into next year that I would be keeping a close eye on. The second big risk is migration trends. Now, the Cairns Council predicts that 40% growth over the next 25 years, but things do change. So I'd be keeping an eye on migration trends and making sure that Cairns stays that lifestyle destination that it's so fondly known for. Thirdly, we've got macroeconomic changes. So if we see the US go into a recession, if we see Australia follow into a recession, the chances are confidence in the Australian property market may decline, and that would see property prices stagnant or possibly even decline in Cairns. So that is a risk moving into 2026, what happens in the macroeconomic environment. Government housing policy is another big one to keep an eye on. There has been talk over the recent years of scrapping negative gearing and getting rid of the capital gains discount. If those two things come to fruition and change in 2026, it may have a negative flow on to the property market. Lastly, as an intelligent property investor, it's important to focus not just on a region, but suburbs and asset types. As we've seen over the last year, units have well and truly outperformed the housing market, but moving into 2026, that may slightly change. So making sure you're buying in the right suburb and the right asset type will be super important to making sure you have a successful investment. So 2026, where do I see the Cairns property market going? Firstly, population growth is expected to remain high, meaning more people will be moving to Cairns, creating more demand for housing, both as tenants renting properties and as owners looking to buy properties for themselves to live in. Replacement costs of apartments will continue to stay significantly higher than market prices. What this means is we need apartment prices in Cairns to rise dramatically before we can actually see developers coming in and supplying new properties to the market. Now, if you're an investor or a home buyer looking to get into the apartment market, doing so sooner rather than later should be in your benefit. Supply of land moving into 2026 will be limited for two major reasons. Firstly, geographically, there's actually not that much land in Cairns left to be chopped up. Like I spoke about, we've got our mountain range running behind us. It really limits the amount of area that we can expand into. And secondly, council infrastructure just isn't there to support future growth. So the council will be purposely limiting our urban sprawl across the region and really encouraging infill into the higher density areas. So overall, looking at where Cairns performed in 2025 and looking into the crystal ball, it's very likely that 2026 will repeat what we saw in 2025, with the market growing around 10 to 20% in the region. If you are looking at buying in Cairns, I have over 15 years experience investing in the region and would love to help you secure your next investment property. Get in touch.